Big news just dropped from Apple, and it's shaking up Wall Street. The tech giant just reported its latest financial results, and get ready because they absolutely crushed expectations across the board. But as with all big companies, there's always more to the story than just the headline numbers. We're going to break down exactly what happened, what it means for the company's future, and most importantly, what it means for your investments. And stick around because by the end of this video, I'll reveal some crucial challenges Apple is facing that could impact everything from their product prices to their long-term position in the tech world. You don't want to miss that. Let's dive right into the numbers. Apple, the company behind your favorite iPhones and Macs, just announced some incredible results for their latest quarter, which ended in June. They beat what Wall Street experts thought they would earn on both the top and bottom lines. Here's the breakdown. Apple reported a profit of $1.57 for each share of its stock. Now, that might sound like a technical detail, but it's a huge win because experts only expected them to make about $1.43 per share. That's a significant beat. When it comes to sales, or revenue, Apple brought in a massive $94 billion. Again, this blew past what experts predicted, which was around $89.5 billion. This is Apple's biggest year-over-year sales increase since late 2021. Even their gross profit margin, which is how much profit they make on their products after accounting for production costs, hit a solid 46.5%. That's better than 45.9% that was expected. Now, these big numbers tell us Apple is performing well overall. But where did all this growth come from? Apple's incredible performance was largely thanks to a few key areas. The iPhone is still king. iPhone sales grew an impressive 13% compared to last year, bringing in over $44.5 billion. This was much higher than about $40 billion experts expected. Apple CEO Tim Cook even said this was a record for June quarter iPhone sales. He specifically pointed to strong demand for the latest iPhone models, with lots of current iPhone users upgrading. Mac sales soared. The Mac business was the fastest growing unit this quarter, jumping almost 15% to over $8 billion in sales. This is a great sign, especially after Apple released updated MacBook Air laptops right before the quarter started. Services continued to shine. Apple Services segment, which includes things like the App Store, Apple TV Plus, Apple Music, and iCloud, reached a new record. This part of the business grew 13% to over $27.4 billion. Tim Cook highlighted growth in iCloud subscriptions and double-digit growth in App Store revenue. But here's where it gets interesting. Not every part of Apple's business is booming. iPad sales were down about 8%, bringing in about $6.5 billion. This happened despite Apple launching a new, more affordable iPad earlier this year. The other products division, which includes things like the Apple Watch and AirPods, also saw a decline of over 8%, totaling about $7.4 billion. Now, let's talk about where Apple is selling all these products. They saw significant success in China, with sales there rising 4% to over $15.3 billion. This is a big turnaround after sales in China declined in the previous 2 quarters. Tim Cook even mentioned that a Chinese government subsidy for some devices helped boost sales in the region. However, sales in the Americas were a slight miss, coming in about $41.8 billion compared to $41.2 billion expected. These strong numbers paint a positive picture, but Apple is facing some significant headwinds that could impact their future. And that brings us to the 2 big challenges everyone is talking about: tariffs and artificial intelligence. I'll get into the details of those right after this. Even with their impressive earnings, Apple is grappling with 2 major challenges: the increasing cost of tariffs and the intense race in artificial intelligence. First, tariffs. The threat of new import taxes, especially from President Trump, has been a major concern for Apple. Apple primarily makes most of its products in China. Apple reported that it incurred about $800 million in tariff-related costs in the recent quarter. While this was slightly less than the $900 million they initially expected, these costs are expected to climb higher. For the current quarter, Apple forecasts about $1.1 billion in tariff costs, assuming policies don't change. This means a total of about $2 billion in tariff costs over 2 quarters. To cope, Apple has been trying to shift production. For example, they've moved most of their US-bound iPhone production from China to India. They're also moving some iPad, Mac, Apple Watch, and AirPod production to Vietnam. Tim Cook also stated Apple is looking to supply chain partners for cost savings and investing over $500 billion in the US over the next 4 years. Here's the critical point for you. These ongoing tariffs could potentially force up device prices for consumers if Apple can't offset the costs elsewhere. Now let's talk about artificial intelligence. This is a huge area of focus in the tech world, and many investors are worried Apple is falling behind its rivals. Companies like Meta and Microsoft have seen their shares surge due to their big AI investments. In contrast, Apple stock has been lagging, down about 15% this year. Tim Cook acknowledges AI is one of the most profound technologies of our lifetime and says Apple is significantly growing our investments in this area. They're embedding AI across their devices, platforms, and the company. Cook also mentioned Apple has acquired around 7 smaller AI companies this year to accelerate their development. However, Apple has faced setbacks. A major upgrade to their voice assistant Siri, which would have made it more competitive with modern AI agents like ChatGPT, has been indefinitely delayed. Apple says this work needed more time to reach our high-quality bar. Their current AI features are limited to things like a custom emoji maker and text summarization. Useful, but not as impactful as what some rivals offer. The big question for Apple is whether they can truly catch up in the AI race and continue to innovate in ways that will excite consumers and investors. Despite the strong earnings, Apple stock hasn't seen the massive surge some other tech companies have had. While it initially rose after the news, it later settled to a smaller gain. Wall Street analysts still largely have a moderate buy rating on Apple stock. Out of 26 analysts, 13 say buy, 12 say hold, and only 1 says sell. The average price target, or where analysts think the stock price is headed, suggests it could go up about 9% from current levels. However, these estimates could change quickly after this latest report. Many analysts are looking closely at Apple's future. They want more clarity on the full impact of tariffs, the outcome of the U.S. Justice Department's ruling on Apple's default search deal with Google, and of course, Apple's evolving AI strategy. Services revenue with its high profit margins is seen as a key driver for future growth and earnings acceleration. So, what's the ultimate takeaway for you? Apple just had a stellar financial quarter, proving the iPhone and its services business are incredibly strong. They're working to manage the rising costs from tariffs by shifting production. But the long-term challenge really is their AI strategy. Can Apple deliver truly groundbreaking AI that redefines its products and user experience, just like it did with the iPhone itself? That's the billion-dollar question that will determine if Apple can regain its top spot among the tech giants and continue to deliver value to consumers and investors. That crucial piece of the puzzle is still developing, and it's what everyone will be watching in the coming months. If you found this breakdown helpful, please do me a favor and hit that like button, subscribe to the channel for more market insights, and don't forget to ring that notification bell so you never miss a new video. Thanks for watching, and I'll see you next time.